Welcome to Armand Academy. Like and subscribe for more content and drop your doubts in the comments. Share with your friends and classmates. For private tuition in these subjects across all boards and universities, contact me here or the link in the description. Let's get started. Printkit Limited invited applications for issue of 80,000 equity shares of 10 each. The amount is payable as follows on application 3. On allotment 2, on first and final call, the balance, and obviously that balance means it is going to be 10 minus 3 minus 2, which is going to be 5. All right, so I can maybe write them here only once and for all. 3 to 5, whose total is 10, which is our face value. Applications were received for 150,000 shares. Applications for 10,000 shares were rejected, and pro-rata allotment was made to the remaining applications on the following basis. Again, we've got category A and category B. Excess money received on application. Excess money received on application was adjusted towards amount due on allotment and first and final call. All the amounts due on allotment and first and final call were duly received. Plus journal entries. Easy sum. Okay. Like literally very easy sum. And I'm just going to make a small note where we have offered. We offered 80,000. Okay. And maybe we can do this vertically. So we have offered and we have applied. So we offered 80,000, but people applied for 1,50,000. Out of those applications, we rejected 10,000. Then we've got category A, where people who applied for 80 got 40. And then we have category B, where people who applied for 60 got 40. Okay, and now we just match once and see the total of A and B over here is 80,000. The total of rejected and A and B over here, okay, will give us 1,50,000. So we know it's matching. Okay, this will help us a little bit in our calculations going forward. There is no premium. Okay, there is no person who's not paying. This is a very, very simple sum. The only thing we might have to worry about is the allotment money is less. So one of these categories, a little of their amount to be adjusted may end up going into the next, okay, may end up going into the next level. Okay, and that means we'll credit calls in advance. And I think that it'll be best if we do that calculation now and see. All right, so if a person is applying for 80,000 shares, but only gets 40, means we have an excess. Okay, so I'm going to write excess of, in the case of group A, 40,000. In the case of group B, it is 20,000. What? Shares. Okay, so the amount required at allotment, okay, in the case of both the groups, depends on the number of shares that they have been allotted. Okay, so this offered column. All right, so it is 2 rupees per share, and therefore 2 into 40 and 2 into 40. That much is needed. Okay, so the amount that is needed is 80,000 and 80,000. But the amount available, which is your excess shares into the application money, okay, into the application money of 3, we need to multiply. Okay, so I'm taking 3, multiplying it into 40,000, I get 1,20,000. Multiplying it into 20,000, I get 60,000. Okay, why am I doing all of this? Because I need to check how much is going to go to calls in advance. Calls in advance. Okay, and where the amount available is less than the amount required, there's no worry. Okay, For group A, the amount available after application, okay, the amount available after application is 1,20,000. The amount required at the time of allotment is 80. So these people can relax. They don't have to make any payment. That means they still have balance, and going forward, that goes into calls in advance. How much? 40,000. What about the next lot? Their amount available is 60,000, but the amount required at the time of allotment is 80. That means they have to pay some amount of money. They have to pay. They have to pay at allotment. Okay, so these guys don't have to pay, but these people have to pay 20,000. Okay, so this table is helpful for us to understand the numbers that will go into the journal entry. Okay, now that we have done so much, we can start with the journal entries. We know that there is a calls in advance account because there's extra money being paid. We know that there is some rejection taking place, so we have to credit the bank account. All right, so the first two entries, at least the standard entry we know, then we'll get into the numbers. Okay, so in journal entries in the books of Printkit Limited. All right, so journal entries, journal entries in the books of Printkit, Printkit Limited. Okay, the first one, debit what comes in, bank account debit. And look at the wordings in the question. On application, not allotment, application, allotment, application. We are dealing with equity shares. So to equity share application account. Okay, and then we will have some narration being application money received for some number of shares. I'm just leaving that blank for now. We already know the numbers, but I will fill it all up together. I'm just putting in the second standard journal entry now, only once and for all. The equity share application, which we credited upstairs, we are now going to debit it. Equity share application account debit to equity share capital account, equity share capital account. Then the extra money towards allotment, we don't put it into calls in advance. We credit the equity share allotment account directly to equity share allotment account. Then the amount that will go to any subsequent calls. For example, the first and final call in our case, that will be calls in advance. Okay, so to calls in advance account, and then to bank account being application money transferred to share capital share allotment, or we can say adjusted into share allotment and calls in advance rejected shares refunded. Okay, so just a summary of what's happening. Now that I'm done making these two entries, now I will think about Now I will think about putting in the numbers, okay, because we have already done the calculations. Okay, so here we are talking about 1,50,000 shares and 3 shares at the time of application. Multiply 1,50,000 into 3. We get 4,50,000 here and we get 4,50,000 here. Then the same 4,50,000 we're debiting over here. Okay, and then we go back and look at our calculations. All right, as far as the allotment account is concerned, the amount required at the time of allotment is 80,000, for group A. Okay, and we have 1,20,000, so no problem. 80,000 we're getting. The amount required at the time of allotment for group B is also 80,000, but they only have 60,000. So 60,000 from here and 80,000 from here, 1,40,000. 1,40,000 will go to share allotment account. Okay, so share allotment account 1,40,000. Then going back, we have calculated the amount for calls in advance, which is 40,000. Okay, which is 40,000. Calls in advance 40,000. Again, going back, the amount which is rejected, 10,000 shares into 3 rupees per share, 30,000 will be bank account. 30,000 will be bank account. And for equity share capital, don't balance out and do. I mean, you can, but there's an easier way. We're talking about 3 rupees per share. Okay, and we're talking about 80,000 shares. So 3 into 80,000 is 2,40,000. 2,40,000. Now I've done the calculation for every step, and hopefully I'm right, and I can find that out by adding. Right, so 2,40,000 plus 1,40,000 is 3,80,000 plus 40 is 4,20,000 plus 30 is 4,50,000. Okay, so it matches. Now that we are done with all of this, our next step, is to ask for allotment. Okay, the allotment money is due, and that entry is simple. Where we have equity share. All right, remember it's equity share, equity equity share allotment account debit to equity share capital account, being allotment money due. Okay, and we have, as far as our allotment money is concerned, 2 rupees per share into 80,000 shares, 1,60,000. Okay, so 1,60,000 over here and 1,60,000 over here. Okay, and we draw the line. And now we receive whatever money we have to receive. All right, so it's going to be bank account debit, bank account debit to equity share allotment account. Remember, we directly credited share allotment, equity share allotment account at the time of the previous uh, entry. Okay, when we did the transfer, we did not put the allotment money into calls in advance. It's already put into the equity allotment, equity share allotment. Okay, be very careful not to make such mistakes. Equity share allotment account. Okay, and we have to think of the amount, which I've already done the calculation for over here. Payment at the time of allotment is 20,000. Required was 80 for group B, but they have paid only 60. The remaining 20 they have to pay. Okay, and that's why I'm going back here and simply putting 20,000 and 20,000. Right? Being allotment money received. Allotment money received. Next, we need first and final call money. So it will be equity share first and final call account debit to equity share capital account, equity share capital account. Okay, and this is being first and final call money due. Okay, then the amount is straightforward. 5 rupees. Okay, 5 rupees into 80,000, which is 4 lakhs. Immediately 4 lakhs here and 4 lakhs over here. Now we have to receive the money, and keep in mind some amount has already been given to us in the form of calls in advance. I know it is this full 40,000 because it is the first and final call. The remaining has anyway gone in allotment. I don't need to think about. So now when I'm receiving the money, some amount of money I'm receiving and some amount of money I've already got. I just have to adjust it in the calls in advance account. Debit what comes in, bank account debit, calls in advance account debit to equity share first and final call account. Now, calls in advance is easy for me because I know the amount upstairs. Calls in advance is how much? 40,000. The same 40,000 I write down over here as a debit entry. Then, how much am I supposed to receive altogether? 4 lakhs. But people have already paid 40,000. So, how much will I get in my bank account? The difference, which is 3,60,000. And therefore, full 4 lakhs goes here. Full 4 lakhs goes here. Okay. And now it is being first and final call money received after adjusting calls in advance. Okay, so a lot of narration, a lot of format, a lot of standard journal entry, and then you have to think a little bit because we have two groups for pro rata. Okay, otherwise this is it. We are done with the question. Any doubt, feel free to ask.